Okay. Yeah, no problem. I don't see the control on the Zoom. Okay, that's fine. All right, welcome. Hello there, traders, and welcome to today's market wrap-up, Friday's market wrap-up. Now, I'm really excited to announce a couple of happenings going on. Of course, we have got some sadder news like the hurricane, the Ian hurricane, that have actually damaged, quite a lot of orange farms in Florida as well. And then we have got the Fiona hurricane as well that had happened. And then now we've got the Ian hurricane. So on that note, we are having all our wishes and prayers for those who are going through tough times there in Florida. But apart from that, we have got some exciting volatility that has actually taken place in the markets, mainly due to inflation, also, of course, Hurricane Ian as well. But apart from that, we've just got a lot to cover today on the fundamental side of it that is actually fueling the market with volatility. Okay, so let's start. Now, today being the last Friday, last trading day of the month, has an avalanche of data, as I've mentioned, loads happening on the economic data's front, as well as happenings around the world as well, economically, geopolitically, politically as well. So here are the main data points relating to consumer behavior, which could impact markets. So let's start off with countries, country by country. We'll start off with Japan first. Now, Japan is the odd one out of the global situation at this moment of time because inflation hasn't really gone significantly above the target, despite the depreciation in the currency. So consumer confidence appears to be staging a little bit of a rebound since the summer and is forecast to increase to 34.00 from 32.5 points in August. Now, that would be the second consecutive month of gains, basically appreciation. Now, with regards to Germany, now Germany is also called the Japan of the East, and Japan is the Germany of the West. This is how they conduct the analysis as well globally at this moment of time. So, as price rise in Germany, Germans are being forced to do something they are really loath to do, or they avoid to do it. Now, dip into their savings. That's basically what, the recession scenario is actually peeping out a little bit more and more, gradually increasing. So, they are having no more deep pockets, and they are dipping into their savings instead. So real wages in Germany have remained negative, and Germans appear to be responding by closing their wallets, or their, every avenue possible to actually spend. They're closing it down. So monthly August German retail sales are forecasted to switch to negative at -1%. So compared to the plus 1.9% in July. So that's a significant drop, and gradually dropping as well, as we can see it in the market earlier this week, especially. Now, annual retail sales are expected to come in at -5.1% compared to negative 2.6% prior to that. So now we're moving on to Switzerland as well. Now, the currency is CHF, as you all traders know. Now, another country that has managed to avoid some of the upward price pressure, and retail sales have remained relatively stable through the year. Now, monthly fluctuations are natural, but a trend similar to the GDP growth rate is seen as generally not putting pressure on monetary policy. So monthly retail sales are expected to increase to 0.6% compared to negative 0.5%. So that's basically where the annual retail sales are also expected at 2.0% compared to 2.6% prior to that. Now we're moving into the US. There's a lot of things going on together with the Hurricane Ian that is going on at the moment, damaging orange farms. So orange juice prices are rocketing as we speak at this moment of time, especially in the US. How that would actually translate to all orange-related products coming to from the US would actually then be determined by how the hurricane has actually sort of subsided along these couple of days or weeks ahead. So we'll take a look at that when the time comes on Monday itself during the market week ahead review. So let's get to the US. Now, there are two important data points coming out of the US. Firstly is the personal spending, really important data that actually correlates positively and directly to the inflationary mode or sentiments at this moment of time. So personal spending, which is expected to expand. Now, however, it should be noted that the figure is not adjusted for inflation. So increased spending is likely a reflection of Americans keeping pace with rising prices and not necessarily a sign of increased demand or maybe economically better or things like that. This is just a reflection of Americans keeping pace with rising prices. This is really important for us to understand that, and not necessarily an increase in demand or better economic situations or anything like that. So US August personal spending is expected to come in at 0.2% compared to 0.1% prior to that. So that's basically the coverage of these few countries that are going to rock the market. And there's a lot of ripple effects that are actually considered to be happening and expected to be happening very, very soon as we speak as well. Okay, so we'll get to a couple of trading opportunities, but taking a look at risk events as well. So what I'll do right now is to share my screen, and in that way we'll be able to go through the economic calendar, a couple of tools as well, and all that you can actually see on the analysis, both fundamentally and technically, onto the charts as well, with trend analysis and technical analysis. Okay, so let's get going with that. Give me a second. All right, I believe you can see my screen right now. So I've got my 10 trade platform, the MT5 available to you, and we can actually take a look at a couple of pairs straight away before we go. We reversed it to analyzing the market, but the reason for that is because we've got loads of demand from students, traders as well out there, and investors asking about a situation that has been triggered by the leakage of the pipeline in the north side of Sweden as well. So that would actually be something that would trigger not only the price of gas, because that's a leakage of methane gas that is in the middle of the ocean on the north side or the northern territory area of Sweden. So that would actually be giving us loads and loads of trading opportunity driven by geopolitics, politics mainly, as well as the current reaction economically due to supply and demand of gases, gas especially, and oil, as well as commodity currencies. So we've got a lot going on at this moment of time. A lot going on at the moment, and that would definitely be giving us a lot of opportunities, but a lot of risk as well involved. So we want to be really careful, and you want to get my guidance and our team's guidance at Bretton Academy together with 10 Academy to give you all the necessary tools and guidance so you are able to ride along the waves of opportunities, but also keep the risk at bay. Okay, so let's get going on to gold, because we just got loads and loads of demands. Not demands, but requests on what's happening to gold. You know, that these are questions and queries coming from traders and investors globally at this moment of time. So let's take a look at gold straight away, and we can then take a look at the US crosses, GBP crosses, Euro crosses as well, mainly because it reflects movements that could possibly be triggered by economic data releases that are of high impact today. Now, what I've actually done for gold versus the USD is to did a bit of a research fundamentally, of course, and then I combined that with trend analysis and some technical analysis, but most importantly, price action analysis. Now, price action analysis would give you the whole territory. Now, you could actually see on my screen that I have highlighted in red. There's a red zone and there's a blue zone. Now, the red zone, usually, you know, it's a territory area or a zone that basically is monopolized or controlled by sellers. Now, the direction of in that box would actually be a buy. So that hence the reason I put there a buy zone. But a buy zone in a territory that is controlled by sellers, actually, because of this red box is actually been highlighted following the bearish mother candle on the left. Now, here that bearish mother candle itself has made it easier for me to highlight that red box as a buy zone, but then controlled territory by the sellers. What that means is that it is a buy zone offering buying opportunity, but not too far in terms of the buying opportunity, mainly because it's got a limit. Now, that limit is at 1695 or 1696 area. Now, that is why we have got hence the reason I've called it a buy zone, but a territory governed or controlled by sellers. Okay. Now, the same goes for this sell zone here in blue. Now, this is where it's probably safer to sell in within this blue box, and it is safer to buy in within the red box. But because it's boxed up, it's basically telling you that it's got a limit because it's controlled by relevant sellers or buyers. Now, the one in blue here is governed by buyers, mainly because it is still in a buying territory. But as prices goes up and then start falling through, let's say, and then it enters the blue area, then it would be a selling zone, but a territory that is controlled by previous big buyers. Okay, so a lot of traders out there, you know, the retail traders especially, are given the education or training on supply and demand and things like that. Now, we are trading CFD, so it is not that easy to actually monitor supply and demand pockets for CFDs, because it's almost impossible to actually really monitor and have a black and white report on exact volume of trades in the CFDs, Forex trading especially. So hence the reason we are able to use the hints of sort of supply and demand or territories that are governed by buyers and sellers through mother candles on the left. So these are mother candles that you can actually see just to the left as the eyes could actually see, and the most recent ones, and they're reasonably or visually big or visually powerful as well. So that's one of the ways for us. Okay, so all right, the share screen. I hope you guys can see my screen. It's all good. Yeah. Okay, brilliant. Now, with that, I want to also go on to higher time frame and tell you a little bit about what I mean by all these bearish candles, especially bearish mother candles, which are either bullish or bearish, and we need to pay a lot of attention to them. Now, if I have this gold chart right in front of me, as you guys can see, we could easily pinpoint all these bearish candle, let's say this bearish mother candle right here, that is significantly bullish, and you know it's long and powerful as well. So you could see that, and all these visually ones, and you can always pick one that is the longest one, let's say the most powerful mother candle, and then compare in terms of visually compare in terms of the sizes of these candles with the other ones, and you can actually then see, okay, visually we have got all this power of selling along this area right here, because it's been governed by all these bearish mother candles to the left, right? So as we go on to the current price at this moment of time, which is currently trading for gold that we're talking about. Currently, it's trading at 1675 or so, and that's basically the price at this moment of time, if I'm not mistaken. And we want to follow that price and go towards the left and look at areas that could actually be taking control, whether they are sellers or buyers that would take control, could actually be seen from the mother candles itself. So if prices were to fall further, then it would actually be entering a bearish territory governed by sellers as well. Now, that is mainly because we have got this giant, visually, it's quite obvious that we have got this giant mother candle right here. So as price falls, let's say if it does actually fall for gold and then it start entering lower areas, that basically means it's actually trading within a bearish territory governed by this bearish mother candle that you can actually see right here. So when it goes down and when the price follows through that size of that mother candle going downwards, then the closing price of that mother candle would actually then be your guide to where the support could potentially be. So as opposed to just looking at lows and highs, we can actually also look deeper into the mother candle itself, the closing price, the opening price, the high and the low prices as well. So as prices fall, if it does actually fall lower, then it has all this potential to be controlled by sellers to pull down the price even more as it goes lower and lower, if it does go lower. Now, that does also depend on what goes on in the States as well, both on the Act of God event with the storm, and also how the situation is controlled there or not. If it doesn't actually impact the country too much, then it could actually then reverse. The US dollar could actually then recover, and the more it actually recovers and driven by inflation, then that would actually pull gold down even more. Now, if gold goes down even more because of the drive of US dollars power to go up, then what that means is that it's got a lot of potential to fall for gold because it is in the area or the territory of sellers, following what we can actually see on this mother candle, bearish mother candle that we can see. So as it falls, and if it does have fuel, fundamental fuel to actually fuel the fall of gold, then it could actually go down as low as this closing price of this mother candle right here. So I'm going to color it blue, this horizontal line, to mark a potential support area. Now, that's potential support area can actually be drawn on the closing price. That means the lower body of that mother candle, right? And also the wick right there. So the lowest of that wick right there. So that's the low price and then the closing price. So we have got potential support if at all prices were to fall and fall more, fueled by whatever that could actually fuel the fall of gold from the US side of things especially, then we can actually see prices to fall right to 1528 area, right down to 1505 area. Okay, so that is for gold, and that is marked on the weekly chart right there. But then as you go on to lower time frame, let's say the 4-hour chart, it's already been marked of where you could actually see areas of resistance as well. So now it's in buy zone but bearish territory. Okay, it's governed and controlled by sellers, so it gives the buyers a chance to buy in within that territory, but it's got a limit. Now, as we see right here and towards the left, if you can see my screen, I will mark the resistance in yellow as well, based on the 4-hour chart for gold versus the USD. So let's take a look at this, and I've got the yellow horizontal line marked here in this area at the closing price of that mother candle and also opening price of that body of that bearish candle as well. So that would mark an immediate potential resistance based on the 4-hour chart. So anywhere between 1 hour to 4 hours if the volume and the momentum of gold is picking up and up and up, then you're getting excited with a buy. Make sure you are actually, if you are already in the trade, to look at the 1682 area. So this is your 1681.62 level. That could potentially be a resistant area. So potentially it would be good to actually eye or plan for your exit before price reaches 1682 at least. Okay, so that is basically a resistant area right there. And let me just mark that a little bit better. We've also got slightly above right there, so we've got a bit of a double line almost overlapping right there based on just these two candles, the opening price of that mother candle, bearish one, and the closing price of that bullish mother candle could act as a very strong resistance at this moment of time. So it could also be just before reaching that area would actually be your take profit area, so you can easily choose where you would like that to be. Now the other thing that I would like to highlight as well is I'll take off this blue line right here, and we are price is reading at 1672.1213, that area at this moment for gold versus the USD. Now for those who are asking, what do I do at this moment of time? Now the thing to do is to look at the risk, because now we have got prices driven right to the upside. We have got prices of gold driven to the upside, mainly as a safe haven response, because it is a safe haven anyway. And we've got all these building up risk events that is going on. Now, especially with the States, also in Euro, and also in the UK. So whatever that's happening in the UK does have a very close correlation positively with gold. What that means is that whatever that is going on in the UK, economically, geopolitically, and all other reasons, politically especially, would actually then create a correlation with gold. So there is a positive correlation in the direction between gold and GBP. Now that has happened from late last year till date. We're looking at that correlation just building up and becoming closer in terms of their movements together. That basically means UK's situation does actually decide on how gold is also reacting. Now, to some extent, I wouldn't say directly, it could have some impact in the various other ways. Maybe the gold's reserve in the UK is amongst the highest in the whole Eurozone as well, or in the European side of the regions, and that could also be one of the factors. So, but we don't know exactly, but we are looking at it, statistically, also researching on month by month progressive correlation is between the UK, the GBP, and gold. So what we can actually look at right now is, yes, gold is pumping up. We've got some risk events, so maybe traders are interested in buying gold, but we shouldn't get overly excited with the buy, because as it goes up, we need to always ask the question of where could be the risk of a reversal. The risk of reversal is really important, because that ties up with your focus on exits being more important than your entries, because that governs your risk. So that would actually then help you understand where you should actually be entering better as well. But most importantly, what do you do right now? Do you actually exit and then re-enter your trade for a buy later on when it starts going up? Now, the answer to that could actually be seen to the left. Now, this area right here has got horizontal candles and mother candles that are quite powerful as well. Now, we have got a big wick there in the past, basically giving us the hint of this whole area right here, this closing price of this mother candle, bullish mother candle, as well as that very high wick at this moment of time, marks a very, very important reversal zone. So that reversal zone means to us as traders as keeping aware of the price of gold. Now, we can get really excited with all these momentum by momentum move of gold at this moment of time going up and up, but there is a limit right there. So we want to be really careful in this area here. I'll mark that for you guys right here in the yellow horizontal line of the price of 1674. What that means is that 1 ounce of gold would actually be 1,674 US dollars. Now that is a price to look at as a limit for a short term in terms of your resistance level. So if you are buying, for those of you who are new in this game in the trading world of just learning to trade Forex, you would need to understand that we are trading CFD. So we are not holding any physical assets. We don't have physical stocks. We don't have physical currencies. We are only trading CFDs, meaning we are only forecasting and predicting the prices of that asset. So it could be cryptocurrencies, it could be gold, all the range of currency pairs that are available as well, and also stocks, indices, and various other instruments that are all available on your 10 trade platform right here. Now, with that, I have already marked the 1674.12 based on all these closing and opening prices of all these cluster of candle right here. Now, this is really interesting. Once I've done that line, look at how the current candle on the 4-hour chart has actually reacted with the wick. The wick coincidentally touches on that line that I have actually drawn based on all the 4 or 5 cluster of candles in the past. So you see, this is where I would like to highlight the importance of looking to the left visually, looking at price action based on mother candles, whether they are, it doesn't matter whether they are bearish or bullish mother candles, but most importantly, they are mother candles that have got significant moves, mainly from the length of the body of the mother candles itself. Okay, so here you look at it and you could actually then see that they are definitely significantly sized mother candles right here. Now, we've also got that very long wick up there in the past. So that cluster of candle could be a referral point of price action for now. So this is what's going on at this moment of time. So what that tells me is that this yellow line could also be a blue line, signaling a potential support or buy area. So only after prices, the body, not the wick, the body of a new mother candle could actually pierce through 1674.12 or 1675 to be safer, and the body starts to increase and go in there and then get into that territory or higher territory, and then fueled by more negativity concerning the state, the US, or anything that would actually reduce the inflationary mode of the US crosses, especially as a whole, then we can actually see a potential buy zone. So a potential buy of gold has not really started at this moment of time. It is actually reducing its participation of buyers at this moment of time, because we have got all this area right here. Now, that yellow line at 1674, to me personally, it's very significant. It is a sign of whether or not to buy only if it goes above 1674. So once prices, the body of the candle, does get fueled by fundamental factors as well, going towards 1675, only then it would actually be a better spot to actually consider the buy. If not, we may actually be looking at a potential reversal for the short to medium term first, before it gets into a nice support level to actually bounce upwards. So that is basically my take on gold at this moment. Now, if at all you are already buying, then you want to actually look at either exiting or re-entering the market later on. It does depend on your risk appetite, though. You have to be very careful with understanding what's your equity level, what's your risk appetite, versus with whether or not you want to actually put on more trades. Today is Friday. It's really important for us to really consider our risk appetite, our capitalization as well, because if you are thinking of leaving surprised or shocked even with the amount of volatility that can actually come in on Monday, because we don't know about all these risk events, the storm condition with Hurricane Ian, the gas leakage as well, the current situation that is going on really badly in Germany economically as well, because of the reliant of gas and all that from Russia. And there's a lot of situation going on with the three economic superpowers of Europe, mainly Germany, driven by Germany. Then you've got France and Italy as well. So things are not going really good in that side of the Eurozone countries, and this is not a good sign. So with that, we have also got inflationary mode. We've also got act of God, the Hurricane Ian. We had Fiona hurricane before the Ian hurricane. So we've just got loads of things are actually happening. And with that, I think it's going to be very risky if you're going to leave your trades open until Monday. That's just my personal opinion on that. So here we have got a bit of a plan, but the plan is to stay away at this moment of time from participating a trade, but you've got an opportunity to trade gold above 1675. Okay, now the 1675 region or level could give you some buying opportunity until the 1680s area. So 1675 to 1680 and above. So you have got that area right there. Now, once it does actually go over 1683, 1684, which is also a bit of a psychological level and a historical level, that could then give us more confidence for it to actually rise up above, and the probability of it reaching the 1696 area, 1697 area would be higher only after it crosses 1680s and above. Okay, so that's just a rough idea on gold. I hope it is clear for us all, and for the traders out there that have actually queried as well. If you guys have got questions with gold before we move on to Euro USD, and before we take a look at the tools and look for newer opportunities on currency pairs especially, and other instruments as well, please do ask me questions right now. Okay, so if you guys have got questions, feel free, type into the little box, and we shall address them, and we shall move forward on to other instruments as well. Any questions, guys? Before we move on to some trade signals and trade ideas on Euro USD especially, we've got some selling opportunity probably. No questions. So let's move on Euro USD. Now, Euro USD, has got highest liquidity compared to all the other currency pairs. So there's a lot of traders, especially newbies, they are practicing with Euro USD. Probably be a good idea as well from my side to look at referring Euro USD as a safer pair as opposed to exotic pairs and all the other pairs that would probably be lack of liquidity, so they increase the level of risk for traders to trade them. Especially, it does also work with liquidity. So the liquidity side of it needs to be really, really clear for us all to understand that it's better for us to look into the trend and look at the big boys from where, on which territory, which country that impacts which type of currencies and instruments, than to just pick and guess while picking all these pairs just by no referral point. So we need to pick the pairs from trend analysis, from what's going on fundamentally as well. So let's take a look at Euro USD on the 4-hour chart. Now I've got it on my screen, and I've written down some selling opportunities, sell entry at 0.9810. That is mainly because it is 10 pips under the 0.9820 psychological number. So that is a better ideal price right there. So I've marked the selling territory of Euro USD in the green line, the two green lines right there. The top horizontal green line marks your potential entry at 0.9810, and your potential TP is at that horizontal lower green line right there at 0.9760. So this one here would give us some safer pips to bag for us at about 50 pips or so. So that would be a safer way of handling the market at this moment of time, considering what's going on in the market. We've got a lot of risk events. We've got a lot of data releases to wait for as well throughout the day. So in order for us to look at the area of the three red horizontal line as selling areas or areas of resistance. So these are areas of resistance. It's looking like it's, most of the candles or the current candle right now is creating a wick to the upside. So if you've got longer the wick to the upside, that means weaker it is to the upside. That's what it means. Now, longer the wick to the downside, then weaker it is to go towards the downside, or the sellers are getting weaker. Now, if you've got a wick to the upside longer, that means the buyers are getting weaker. Now, this is what we are looking at now, and it is weakening as well at the three lines that I have actually pre-drawn some time ago. So this is a good sign where we have got the wick getting longer in within that three horizontal resistance line as well. So that is giving me more hints that the market is weakening to the upside. So it's weakening and buyers are retreating, sellers are coming in. So if sellers are coming in, more sellers are coming in, then it would trigger the price at 0.9810. And then I'm using the bearish mother candle on the left right here as a sign or as a hint for more selling power to take place. Now, visually, we can see that that candle is quite significant. That mother candle, that bearish mother candle right here, has got a power in the past. Now, this candle or this selling pressure has actually happened back in a couple of months back, about 1-2 months ago. It's in September anyways, but it's this year. So that is quite recent. And it has actually been governed by a bearish mother candle. So that means that territory there belongs to the sellers right here. So this is a sell zone, and it's a sell zone, and also in a selling territory or the seller's territory. If you are in a sell zone and you are in a seller's territory, the probability is much higher for the sell to take place, and the probability for a buy is much lower. So here we have got the sell entry at 0.9810, your TP at 0.9760. So again, as we have actually discussed what the SL could be. Now, the SL, you want to keep it really simple at the 1-to-1 ratio. So what that means is that you want to mirror the same number of pips, similar number of pips for the entry to the take profit. The entry to the stop loss would actually be a minimum of that number. So the minimum potential profit in terms of entry to TP is 50 pips. So because it's 50 pips, then you need a minimum of 50 pips as well to your stop loss. Now, what I would suggest is, because we've got very volatile market at this moment of time as well, you want to increase that based on your risk appetite as well, to be a little bit more, or as much as you can increase your SL above 50 pips as well, just so that you don't get too closely stopped out, for example, because especially with this current situation, current market conditions are quite volatile. Lots of liquidity comes in as well, but it's it's very wavy in the market at this moment of time, just so that you don't miss out and just get stopped out. Hence the reason you want to maintain your stop loss above 50 pips. Okay, there you go. Now we've got Euro USD covered, we've got gold covered. Okay, now we've also got loads of questions. If you guys have got questions on Euro USD, I hope it's clear at this moment of time. It is uncertain. It's got some opportunity for Euro USD, but it's also uncertain in terms of its trend. So hence the reason you want to take a risk in this one. You want to conduct a pending order. You don't want to monitor the market and get glued on the screen for Euro USD and all the other pairs at this moment of time. Why? Because it'll drive you to be emotional. It'll drive you to have more fear of missing out and everything else, especially in a very, very busy volatile market. When the market's volatile, it's got the tendency of tempting you to have all these assumptions as well. So hence the reason, always go back to the PRICE, price trade plan. Once you are on the price trade plan, you can then focus and be more disciplined, and basically you are patient as well at the same time, just monitoring logically, not to actually allow all these assumptions to create some kind of opinionated self-opinionated market review or market commentary in your head. We don't want that. So when that comes in and then it goes to the emotional side of it, then that would actually then be very difficult to go back up the spiral. When it comes down the spiral in terms of your panicking or a bit more stress because of only your thoughts and assumptions, then it could actually be really, really dangerous. Okay, now I've got... Okay, we've already got people coming in. Okay, good. For those of you who have just come into the room, I think we have already gone through quite a bit, but don't worry about the recording. It'll be immediately available on the channel, as I've mentioned, on the YouTube channel. Okay, especially for those who have joined and it's your first time as well to joining me in my webinar. Then you just at the end of it, just as I ended my webinar, you'll see it pop up in the latest video section on my YouTube channel, Bretton Financial Trading Academy channel. Okay, all right, there you go. So that's Euro USD. So we've got some comments, suggestions, trade ideas as well, especially for gold and Euro USD. Now, let's take a look at GBP USD. Now, you notice we've not gone to the tools, we've not gone anywhere because I've done all the research as of last night until early in the morning. So I've done a bit of a reading, research and analysis, and I'm quite confident to look at where we can place all the resistance and the support lines as well technically. So I've got the fundamental side of it to fuel my decision and fuel the market as well, and fuel the moves of the instruments that I'm choosing to actually go towards the TP as opposed to going towards the SL. Now, that is only if you are very, very clear with the current trend and current happenings as well. So hence the reason research and analysis are the ones that could actually then give you high probability and low risk trades. So now as we see GBP USD on the 4-hour chart, now we have got a nice run of the bulls, right? The bulls have taken the price to skywards now this moment of time. But what you need to be understanding is always to have two sides of the story. Now you need to flip the coin every time you are on the bullish market. You need to flip the coin and ask yourself, where would it reverse, and vice versa. So now, right now, GBP versus the USD is trading at 1.1219 now. 1918 is just a couple of pips, just 1-2 pips from the psychological level of 1.1220. Now 20, as it pierces to 20, it would then meet the 50. So I wouldn't draw the 20 psychological number above the current price, mainly because it might overlap it's too close to the current price. So I'll take the next psychological number up, and I'll mark that. We'll leave that at yellow, but it's probably better to change that color to red, just to mark it as red, because I usually use the horizontal lines colored red for marking a reversal, you know, to the from an upside to the downside, and then support line would actually be in blue. So here I will mark the resistance level at 1.1250. Okay, so then we can also look to the left with mother candles as well, just to combine all these little strategies and techniques together. Now, we don't actually use them as a standalone strategy. The geometric patterns is not a standalone strategy. Everything that I have shared with you, psychological numbers, looking to the left with mother candles, closing opening price of larger mother candles, and all these has to be amalgamated, meaning to combine it all together to give you that clear movement and clarity of the trend and everything else before we just think that we just pick one out and then we just follow that one. It doesn't work like that in a proper analysis. Okay, all right, so 1.1250 right here. So I've marked that red line at a psychological level above the current price. So as you can see, we've got that marked there. And right now it's at 1.227. It's got a little bit of room, but if you're already buying right now, it's probably best to exit 10 pips under the 1.1240. So 1.1250. So 1.1240 would actually be an ideal price for exiting. So this is entirely dependent on your own strategy, especially on the money and risk management side of it. Okay, your risk appetite, your capitalization, you would need to really understand that well. If you've got questions, just ask us and we'll be able to help you guys with that. Okay, so under the price, if prices were to come downwards, now it's only 1 or 2 pips away from 1.1220. So similarly, I wouldn't draw a line on 1.1220. It's just too close. So what I would do is to draw a line at 1.1200 instead. So then I've got another psychological level under the current price. We're talking about GBP USD right now, okay? It's on the 4-hour chart. So let's do that. 1.1200, okay? 1.1200 right here. So we have got now 2 lines. So the current price of GBP versus the USD is trading in between 2 psychological numbers, trapped in between 2 psychological numbers. So we need a breakout, whether it's on the upside, if we are looking at an upward type movement, or let's say the trend overall is to the upside, and then we've got fundamental fuel to drive GBP above or higher than the USD, then we want to look at the 1.1250 and above psychological level. So the buy would actually then be 10 pips under 1.1260 for the buy side of it. For the sell, if at all it is actually breaking out lower, and then you've got fundamental reason to drive price of GBP USD lower, then you want to look at entering only 10 pips under the 1.1200. So 1.1190, for example. Okay, right, there you go. So that is basically it. Now, we can always look at how tempting the current candle is. And the current candle is not the overall trend. So we don't want to look at all these current candles and all this short-term vision of thinking and assuming that, oh, look at that, it is an uptrend. No, that is not the way to do it. The best is to look at the cluster of candles. We do a trend analysis, as I've mentioned many, many times. And this is basically how we do a trend analysis. For those of you who've just joined and you're new and you're just your first time, we do a trend analysis before we do a technical analysis. But before trend analysis and technical analysis, it's always best to start off with your fundamental analysis. A fundamental analysis does also include your research and analysis on news, on current situation, geopolitical conditions, a lot of things. There's a lot that I have taken away from your time of doing so, that I have actually done the research and analysis always before the market. Okay, so here, for example, we have got 1.1250 at the very top right here. So 1.1240 would actually be an ideal place that you can actually exit the market if you are already buying the Euro USD, the GBP USD, sorry. So if you want to trade again and you want to participate in a buy for GBP USD, you need to first exit and then think clearly first of the trend. So that's why we're doing a trend analysis. Now, with 1 hour chart on the GBP USD, we don't have a clear trend. Even though you are tempted at this moment of time to look at the charts and everything else that's going on is showing you, oh, it's an uptrend. It's very easy to do that, but that is not a proper exact way of doing a trend analysis. A trend analysis needs at least 3 consecutive time frame for you to notice whether or not there's a match between all the 3 time frames. Okay, at this moment of time, we have got entanglement, we've got the 3 lines, the 3 EMA EMAs. I use the 3 EMAs, exponential moving average of 50, 100, and 200. Now, the way it looks like it is potentially, yes, you've got a bias to the upside because you've got a cluster of candles. Price action itself is above all the 3 lines, but 3 lines are not showing us clarity and smoothness of trend. Why? Because the 3 lines are not going up like this in the direction of all the cluster of candles. They are going slightly sideways, as you can see, and then you've got a crossover of the 2 lines. They cannot cross if they want to actually show you a clear trend. So there's no clear trend on the 1-hour chart. So now let's proceed to the 4-hour chart. Now the 4-hour chart is just something else on Euro USD. It's just not matching with the 1-hour chart. It's also trending or trading in between the 3 lines. As you can see, it's in between. It's not the candles at the moment. The current candle and the cluster of current candles are not above all the 3 lines, are not under all the 3 lines either. So this means you probably would be sticking your finger in a washing machine, that kind of metaphor, if you are going to be trading right now. This is the reason why, if you are in doubt of the clarity of the trend of the market, if you are in doubt, you stay out. That's probably the best advice I can actually give you for today for GBP USD at this moment of time, because we've already got 2 time frames that just giving us the hint and clarity that the market and the trend for GBP USD is not there yet. Okay, it's just possibly picking up, but it's just not there between 1-hour and 4-hour chart. So if we were to move on to the daily chart, we can then see that the longer term has got some clarity. The 3 lines are flowing like a river to the downside, and majority of the candles are under the 3 lines, even though we have got a bit of a trend movement to the upside, but the majority of candles are under the 3 lines. So then we go on to the weekly chart as well, and then we can see, there is a clarity of a downward movement from medium to long term. This is what it means. Okay, we have got clarity of the 3 lines flowing like a river to the downside, okay, towards the floor without touching each other. On the daily and weekly chart especially, we've got all the majority of candles are also governed by more bearish candles. You can actually see that very clearly. If you were to count all these number of candles right here, I think the number of bearish candles would outnumber the bullish candles, okay? And the same goes for the daily chart right here as well, okay? And if we were to just go on to the monthly chart, it's quite clear that medium to long term, we would actually be seeing more downward pressure. So what that means for GBP USD is that the movement to the upside could potentially be a reversal of a downtrend. So it's just a reversal for now to make more lower highs and lower lows. This is what it could potentially be. Now, with the current understanding of geometric patterns, then it would actually be creating for me the ABCD, bearish ABCD pattern to the downside, right? Okay, so if we were to go back to the 4-hour chart, just so that we are a little bit more updated with current movements of prices and current short to medium term type movements, then we could see that this potentially, once it does actually start to reverse, then that would create the C point of my ABCD pattern. This one here would create a potential ABCD pattern to the downside. Why? Because daily, weekly, monthly, especially for the medium to the longer term, it does look like it's favoring a downside momentum for GBP. So will we actually be looking at a potential reversal? We don't know that for sure, but we can always use the stochastic right here to look at whether or not we have got some divergence going on. Okay, so here, for example, we have, that's the hourly, the 4-hour chart. Let's just get rid of this yellow line first. Now here itself on the daily chart, you can see that we've got a high here and then the current price here. We've got a high here and the current price. Now let's draw that trend line from the high to the current price. It's a downward slope, as I have actually drawn it in yellow, as you can see. Now let's do that similarly on the stochastic. From that high goes to current price. It's a slope to the upside. So it's an upward slope, on the stochastic, but it's a downward slope on the chart itself, on the candlestick chart. Now that when it's a mismatch, that's called a divergence. If there is a divergence or a mismatch between what you see on the candlesticks, that slope right there, and the slope on the stochastic, it doesn't match. One is going down, the other one is going up, right? An upward slope. Now we have a divergence. If we have a divergence, that actually means that we may be experiencing a potential reversal. That's what divergence are. Okay, it's very simple. You don't need to change anything on your stochastic. You just, as it is, use the parameters on default. You just click OK, and that's it. And you just draw the slopes from high to low, low to high, and then you do similarly on the stochastic as well. And then you see whether or not it's the same type of slope or is a different type of slope. If they don't match, or there is a mismatch, then there is a divergence. If there is a divergence, there's a potential of a reversal. So a potential of a reversal, meaning a reversal of the current movement trend at this moment of time. We've got all these candles going upwards, so we have got a potential reversal, especially to the downside. Okay, so there you go. So if we were to go on to lower time frame, you can see that it's a step going up, higher highs, higher lows so far, and then you go on to the 1 hour chart as well, higher high, higher lows. So you've got an uptrend bias on the 30 minutes, 1 hour, and then you go on to the daily, just picking up as well. So because it's been picking up from lower time frame to medium time frame, that means currently it's on an uptrend, and you have a divergence, meaning that uptrend could see towards a reversal coming soon. So if we go to the 1 hour chart as well, then you can see that we have got a divergence on the 1 hour chart as well. That means short term. If you are on a 1 hour chart, the movement could happen anytime between 30 minutes to 1 hour time. So in between 30 minutes to 1 hour time, we might see a reversal as well, mainly because this is a high and then the current price is to the upside. So that's an upward type slope in yellow. Now, similarly, it's roughly around here. You can see from the high to the current price area, it's quite a flat type movement right here. Okay, so that's a divergence as well. So it's not only slope up, slope down, but it's also, if it's a slope up or slope down, and then it doesn't match with a flat type slope as well, or a flat line, then that's a divergence as well. So this is a divergence. So this is where it's warning us, even though it's of course, a lagging indicator, is just giving us some hint, just to be a little bit afraid, a little fear, to not get overly excited with your buy and then have all these things in your head telling you that yes, you can buy, and then you're just looking at the current candle and the the intensity of the buy taking place at that moment of time shouldn't be tempting you. You should actually be doing your analysis based on the PRICE trade plan. So you need to have the fundamentals to back up your technicals as well. Okay, all right, there we go. Any questions on that? Any questions so far? All good? Any questions at all? If you guys have got questions, just type into the little box, and because we'll be having another 5-10 minutes or so the most, if you guys have got questions before we end the session for today. So we've covered GBP USD, Euro USD, gold as well. Now what we can actually do right now is to go on to the tools on 10 Academy. Now 10.academy has got this wonderful set of tools that has actually been designed. So I am using it on a daily basis, where it makes more sense to go at one place as opposed to bringing you to other websites as well, and it just it's a hassle. So you've got a one-stop shop right here, where you have the tools, you have the economic calendar, the tools like the heat maps as well, and also everything else that you need to actually learn from, including courses, all the past videos as well, ebooks if you want to read, and especially news on the fundamental side of it. So you've got all these hot news coming up, and they are streamed from Forex Mirror, and it's all at one place. And Forex Mirror streams all these news from various sources all in one. So we have Forex Mirror in within the 10 Academies platform as well. So then you have got all these wonderful headlines, news headlines that gives you a lot of hint of what is going on. So we have got a news here that says the Fed is going to take a restrictive policy at least through next year. You've got all that kind of news. We've also got specific type of news on specific pairs like USD, JPY above 146.00. So now you guys know 146.00 is a psychological number. So it says that it eyes that level to go upwards, but also if you are already buying, then you know that you have to exit at that area and only re-enter after it goes above that psychological level, at least by 10 pips. So 147.10, for example, would be better. So hence the reason I've mentioned that it's always good to mix and match all these little techniques, strategies, and approaches, and have it as a system that you would apply throughout the trade plan, the step-by-step of the trade plan itself. Okay, so let me just I think we have got the video up on some of you. All right, there you go. So I hope that's clear, and let's also just very quickly go on to the heat map widget right here within your dashboard, within your 10.academy dashboard. So this is a very nice heat map that gives you highlighted ones throughout the movements of each one currency, and that's good. If you compare to the heat map on Action Forex, it doesn't have that very catchy tool of having it blink in front of you to show that you've got that movement going on live right now. So that's actually quite good. And we've got highlighted as well. The highlighted ones are the ones that's been increasing steadily as well, or increasing or decreasing. So we have got the green highlighted box and the red highlighted box. So red, whether it's highlighted or not, is your bearishness, and then the green one, that whether it's highlighted or not as well, just shows you that it's for the bullish bias. Okay, so for it to be on an uptrend. So here, for example, if we look at currencies on the left first, always start currencies on the left, we could see that horizontally under GBP, it's just going up and up and up against all other currencies. So that means that GBP is bullish against most of the other currencies. So if we were to simply do a little bit of research, for example, give me a second, a little bit of research on Google itself, then what you can actually do is simply type UK, let's say, okay, economy, and then GBP, right? And you just want to look at all the current news and click onto the news tab right here. Then you could actually see 1 day ago, 23 hours ago, and 3 hours ago. Now, 3 hours ago, it's got a headline saying the British pound back to breakdown levels as the Prime Minister doubles down, okay? As PM doubles down, will GBP USD go lower? So you see, it's questioning about some negative impact or response from the market in the UK. So that basically is giving us a hint straight away that there are likely to be a reason for a downward movement. But when we go on to the chart for GBP, you see, it's just reversing right now as well. So there is a lagging in news as well. There's a lagging of a response from current traders as well. So we want to be really careful with the lines that we have drawn. So we can see that only now that we have got a reversal going on the 1 hour chart, right? It was about an hour ago, it was just giving us hint from the long elongated wick of the mother candle as well. But then when we do the analysis of a divergent analysis using the stochastic, it was already telling us that yes, within 1 hour and 4 hour as well, we may expect at any time within 1 hour and 4 hour a reversal. And this is what's happening right now. If you go on to the 30 minutes chart, you could see that it has actually reversed in between the two psychological lines that we have just plotted just now. So this would then save you, right? So you would then, if you have bought and you would you would already have exited at 1.1190. So it wouldn't actually impact you at any point. You've already taken your profit, and then you would just watch the market. So what if the market is actually going to be stronger to the downside, then you would be participating in the sell of GBP USD. But at this moment of time, it's probably best for us to just sit and watch and look at that correction first. And maybe at that correction, you could actually then buy the dip later on, but also to monitor how prices for GBP USD would be reacting to these two lines. If it breaks one line after another line and then go higher than 1.1250, which is the psychological level, then it's got more room to the upside. And then we can actually plan later on what we need to actually do. At this moment of time, reversal is taking place for GBP USD as we speak, and it's quite the same in most of the time frames as well. So we can see long wick on the daily chart. We can see 4-hour chart as well. That candle, bearish candle, has popped up, and that bearishness is coming downwards. Okay, so that is basically it, GBP USD at this moment of time. Now we've also got some questions on the USD CHF. USD CHF is also doing that at this moment of time, but I wouldn't actually spend too much time on pairs that does not appear to be attractive on the heat map, because that's what the heat map is for. So we have got the heat map, and basically it's probably best to use this tool as best as you can. Okay, so you want to click onto your if you're using a laptop, and just to refresh it with the F5, or if not, just click on it and just make sure that it's been refreshed, that page that you have actually put on your laptop or on your mobile, just so that you are looking at current updated information on the heat map. So here it's really clear, it's very, very clear that we have got, look at the horizontal, don't look at the vertical, look at horizontal, and start off with currencies on the left hand. Okay, so on the left hand, we've got all these highlighted ones. The rest are faded, they're not highlighted like this one here. Now on GBP, it's just giving you that signal that it's bullish, 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 right? So that means that it's got a lot of participation. But right now, after we have done an analysis and using the stochastic, looking at lines drawn with previous mother candles and all that, we ourselves have found out that it's a reversal. So hence the reason we need to be really aware of how do you actually use the heat map together with price action and trend analysis and technical analysis. We need to combine information together and then make a decision, not to actually just follow this tool and then you just do as the tools say. No, that does not work in trading. That's why it's a difference between you following a particular tool or a particular especially tools and EAs and indicators, is they are lagging as well, and they are only termed as an indicator. So that basically means you need to make your own personal decision as well. It's very, very important. Okay, all right, there you go. So GBP, strongly bullish as it looks like it compared to all the other currencies. Now it is strongly bullish against CHF the most. So GBP CHF would probably be a good pair for us to also take a look at. We also have bearishness at the moment against the GBP, and that would actually be CHF being the most bearish against the GBP. So GBP is most bullish against the CHF. So what we can actually do is to look at whether or not we've got, we need to conduct a trend analysis first, and then to look at whether we have got any opportunity to trade. So just before I end the session for today, let's take a look at GBP CHF to look at whether or not we have got a trend that is clear, first of all, before we make any decision to actually trade. So GBP CHF, let's look at how far the bullishness is. Is it actually close to reversal as well, or it's got a long way to go more for GBP versus the CHF? Now, this is on the 4-hour chart. If I go on the daily chart straight away, I just want to look at what is it doing at this moment of time. Now, it's quite obvious. It is actually in a bearish territory, but it's got some buying, but it's close to reversing, in my opinion, because if you go onto the daily chart and you look at how it's trading at the moment and how it's trending, we've got it at trading at 1.0918 or 19, which is only 1 pip away from the 20 psychological level. So the next psychological level would actually be at the 50. Now, I'm not sure whether it would go to that high at this moment of time. Let me just draw that psychological level first. So it's 1.0950. So 1.0950. We're looking at GBP versus the CHF. So here we have got pretty close. So we've got 20-30 pips up before it reaches the 1.0950. But as we look to the left slightly from the current candle, we should be focusing on this mother candle, this bearish mother candle right here. And the opening price of this bearish mother candle could be the resistance as well. So we need to mark that very nicely. And also we could draw a third horizontal line, marking a resistance on the wick itself. So we've got 3 lines right here. Now we have got 3 lines based on psychological number, based on the opening price and the wick of that mother candle that we can see. We've got 3 horizontal line that marks a bearish area or zone, but most importantly, it marks resistance. So if we are already trading the GBP CHF, we should have already exited the trade at 1.0910. If you are still trading and still keeping your trade open and you are hoping for it to go up more, you need to be very careful because you would need to exit 10 pips under 1.0940. If you are really wanting to trade and still have got lots of confidence in wanting to participate in the buy, in my opinion, it's already giving you hints that it might not want to go up higher at this moment of time because of the weakening of buyers, and that is being reflected by the wick at the very top of that current candle at this moment of time. Okay, all right, there you go, guys. This is basically it. So for now, if we were to look into trend analysis on the daily chart, is quite clear. Current candles are all under 3 lines. 3 lines are looking really good and smooth to the downside. If we start off with the 1-hour chart for GBP CHF, you can see that it's not clear at all. We've got the entanglement of the line. The lines, the 3 lines, EMA lines, are to the sideways, not good. If we go on to 4-hour chart, it's trading in the middle. So it reflects what's happening with the GBP USD as well, or the other currency that has got similar movement. And if we go on to only on the daily chart, that means medium to long term only, it would probably be a little bit better or clearer in terms of the trend to the downside. So I would guess it probably is on its way to reversal as well. So we are aiming at downward type movement for GBP CHF as well. Okay. All right, there you go. So that's for GBP CHF. Any questions at all? You guys have got any questions? All good? Okay, there we go. Questions, guys? No questions? Let me also mute. Okay, that's fine. Okay.